Welcome to the big show. It's the Retire Young radio show. If you're a first time listener, thanks for stopping by. I am your host, Joshua David, and we are always happy to have you with us today. As always, I have my great friend and my great pal. And Al, I got to ask you one question. It's been a year of opportunity. Were you naughty or were you nice?
You know what? I thought I was pretty nice, but actually, with all the lockdowns that we all went through, we all learned a lot about each other this last year.
We did.
I have been informed that I am a great multitasker.
What does that mean?
Well, it means that I can listen, ignore, and forget all at the same time.
That's a skill.
That's a skill. I always knew I could listen and ignore, but now the forgetting part, that I wasn't aware of that. I guess I forgot.
I'm actually remembered to say that.
Good deal. All right, now we got everybody confused.
How you doing today, Al?
Good, very good. How about you?
I'm doing really good.
Good.
It's always great to be back helping our Retire Young family make those better investing decisions. And Al, we had another great week in the financial markets. It was Christmas time. And there's been a lot of opportunities that there's a lot of investors, they feel like they're missing out on, even though this market keeps chugging along.
Mm-hmm.
And today, some of the things that we're going to talk about and dissect is how us as the average person or the public can participate with the big institutions, the big banks. We call it the smart money. So before we do that, let's recap what's been going on the past month or so, or even let's recap the year. What's happened and what are some potential opportunities coming up in 2021?
Yeah, crazy year. I think a lot of people are looking forward to January 1st so they can kind of put 2020 behind them. However, a lot of people did extremely well. These markets have been giving us some great opportunities. And I think what's been happening is that the market's been moving up and down based on what's happening with the COVID, based on what's happening with the vaccine and the stimulus issues. So what's been happening is, as far as market moves, has really been broad-based. And what we're seeing now and we're going to be seeing now is more of a stock pickers kind of a market. And that makes it even more important to know how to identify assets that are going to move in price enough for someone to consider a trade. And we had a lot of people that came into the center this last year, Josh, who watched what happened in the market. And basically, that's what they did. They watched it and they didn't participate, or they were in the markets and didn't do as well as the markets in general. And they're wondering, why? What was the problem? Well, is the problem because the market's random and unpredictable, or is the problem the trader and the investor? Unfortunately, that's the key. That's the answer. It's not the market itself. And you need to ask yourself how you're making your investing decisions. How do you decide what to get into, when to get in, when to get out? Are you just making arbitrary entry and exit positions, maybe some bad selections, or are you ignoring the most important thing that we feel is something that needs to be identified and utilized, and that's timing. And that's something that most of you are probably saying right now, well, you can't time the market. We've been told you can't do that.
Yeah, and who's telling that? It's
well,
the brokers,
the people
advisors.
the people that don't want you to know how to do it, because if you did, you certainly wouldn't need someone else to tell you what
Correct.
to do. And we're not saying that you can time everything, every asset move, and every move based on something that we can't control, like opinions and news events and things like that. But what we are saying is that it's possible to time price moves based on something that happens on a repeatable and a reliable basis. And that's what we address with our foundational strategy, our core strategy. But there's really two problems that need to be addressed. One is the emotional impact on making proper decisions, and the other is simply the lack of proper education that's needed to maximize the benefit of opportunities to succeed. And number one, the emotional part of it, that's really important because everybody knows that you're supposed to buy low and sell high. That just seems like a very basic, simple concept. The reality is that the majority of the public does exactly the opposite. They buy high and they sell low because of emotions.
Yeah. Just to give an example of that, I mean, you think about this, the average investor is taught to look at a stock, look for great earnings, a great management team, price of the stock is trending higher.
Mhm.
Well, by the time all that has already happened, price is already up. So that's why you're saying there is people are buying after the price has already moved up. So they're actually buying high and with the hope to sell higher. And that's where proper market timing comes into play.
Yeah, well, when you think about it, all that, the things you just mentioned, all those fundamental things that people are supposed to look at, that's all public knowledge. But you know what? Somebody knows that information before it becomes public knowledge, and that's the big institutions. They've already made their trades. They've already taken a position based on things that we either never know or we get too late to really take advantage of them like they should be. And the key is really if there's somebody out there that knows all this information and can make educated decisions based on that information, wouldn't it be great if we could just do the same thing they're doing? Why go through all the work when someone's already done it? Somebody knows the real value, the true value of something, and somebody knows when it's overvalued. That's the big money. That's the institutions, what we call the smart money. Those are the guys that really move price. And when you think about it, why do you make an investment? Why are you in the market, or why are you thinking about it? For most of you, the answer is because you want to have a profit. And if you want to have a profit, you have to identify the right price to get into something, the right price to get out of it. And that comes from education. The emotional part, that's controlled by having a plan that follows a set of rules. We want to take as much as possible your thinking out of this. If you have a high IQ, it's not going to make you a better trader than somebody else. That's not what's important. What's important is just following the people that know what they're doing, that actually are moving the price, and that's the institutions, the players that take a position with a large enough volume to move the price of something, and it becomes key then to be able to identify when they're doing that. That's what our strategy does.
Yeah, and the fact of the matter too, Al, is there has been a lot of people that have participated in this market this past year. Unfortunately, there's been a lot of people that did not participate, and we're seeing more and more people want to learn more on how to participate in a positive way in these financial markets. And you have to have the proper timing. It all comes down to understanding supply and demand and using that on a repeatable basis. And Al was talking about, there's really two problems in trading and investing for the public: is they make emotional decisions and they have no education. We're going to kind of take two of those words and flip-flop them. Let's help people make educated decisions. Al, we got a packed show coming up here. I want to talk more about the smart money and how they're using multiple assets for income potential. They utilize these markets, the futures, the Forex market. The public doesn't even know that what they are. These techniques and strategies are available to us. So coming up next, how the smart money is creating income. This is Josh and Al. We will be right back.